Today is indeed Fed decision day in America, and while investors are obsessing over what the Fed says and doesn't say, the reality is that today's borrowing costs will be headed even higher after what the Fed unveils this afternoon. And that could spell bad news for retailers of all kinds this holiday season.
That's a great intro.
What a downer.
Yeah, well, it's the reality. So let's, first graphic here up in this is, we're getting more or increasing signs of a lot of consumer weakness, and it's starting to pick up. We've been talking about this past 2 weeks as these warnings have come. First, Whirlpool cut its guidance. You have Generac, the generator maker, warning about bloated inventories despite hurricane season, which theoretically should be causing more generator sales nonetheless. You have deck maker Trex, like we talked about yesterday. They're seeing sales, or they saw sales in the third quarter flat out plunge, terrible outlook. American Express, when I talked to CEO Stephen Squeri about a week and a half ago, when they reported earnings, touch of caution in their full year outlook, not dire by any means, but still some red flags there. Bank of America, when I talked to Brian Moynihan, the CEO of that company, noting that card spending through October up 10%, but that was just a little bit slower rate than what they saw coming out of the third quarter. Just little red flags, but now we have a couple charts here. First off, speaking of B of A, they put out a lot of good data on card spending, and you can see really card spending among B of A customers has started to weaken a little bit during the holiday season. Now, is it falling off a map? No, of course not. But when you're trying to put the pieces together and think about how you should be investing into the holiday season or investing into next year, you have to take all these pieces and think about them.
I think consumers are also reminiscent of recessions past or economic downturns past, and in trying to take a different approach, perhaps readying their wallets, readying their credit as well to be able to sustain through a period like that, which means kind of the vacuum of some of that spending, at least in portion over time.
And it's not just, there's been a lot of focus on low-income shoppers, middle-income consumers, but look at this next chart from B of A. It shows consumer sentiment by income group. And really, this chart, I think, signifies that, the plunge in the market this year may start to impact consumer spending amongst wealthier households this holiday season. I haven't seen it within luxury goods. Maybe this Estee Lauder quarter today is a sign of what could be to come from higher income shoppers this holiday season. They'll still be out there shopping, but maybe not at the rate the market thinks.
Yeah, and that's not surprising to me because of what's happened with the market, right? In other words, the top third of incomes have the most invested in stocks, and stocks on the year have not done that well.
Yeah, and lastly, we're tracking also this comes from Citigroup, restaurant sales. Restaurant sales, again, no big falling off a cliff here, but still a steady decline. And we saw even, McDonald's had a great quarter, but their traffic to the restaurants under a little bit of pressure. We talked to Wingstop yesterday, good quarter, traffic a little bit under pressure. Dine Brands reported earnings today. I'm talking to CEO John Payton a little bit later on, but sales there were under a little pressure as well.
And it looked like the traffic was up above 2019 in that chart, no?
Yeah, I mean, relative to
just now.
Yeah, relative to then, but it is not spiking and is not going up. Theoretically, you want to see these things going up. Overall, here's my take. I think you're going to see more retail blowups coming very soon. As these companies report earnings throughout November, there's Santa Claus coming out of the chimney. It will start early on next week. We'll get some results, I believe, out of Tapestry, some high-income companies, and then Walmart, Target, you name it, will report.
I mean, this is in line with what we heard from Lorraine Hutchinson yesterday over at Bank of America, where she in particular was highlighting the inventory numbers, which continue to be alarming.
Well, she inspired me to do this because her comments were very on the mark.
Yeah.
On the mark. We had Santa Claus there, but it had a Grinch tenor, if you will.
Better than Sad Claus.
Oh, yeah, we should have had a green.
I don't want to be a Grinch. I just want to be happy. Guys.
Well, then stop telling us things are going to be terrible. Sorry, Saz.